If you turn your back on the charts today, you are going to miss the biggest institutional wealth transfer in crypto history. Listen closely, especially if you're watching from the United States, because the Digital Asset Market Clarity Act moving through the Senate right now is literally going to decide if your portfolio sinks or swims over the next 12 months. Do not look away. What looks like a total market collapse on the surface is actually masking a highly calculated multi-billion-dollar setup being orchestrated by the exact same institutions telling retail to sell. Look, the macroeconomic reality we're dealing with right now is an absolute bloodbath. We've got a sudden, violent risk-off environment that just triggered nearly $1 billion in total crypto liquidations, aggressively wiping out leveraged long positions across the board. Market sentiment has completely deteriorated. We're sitting at a crypto fear and greed index score of 23 points. That is deep, deep into extreme fear. Retail traders are capitulating, completely blinded by the panic of the hour. But here is the massive twist that contradicts everything the mainstream narrative is pushing right now. During this exact same month of intense volatility and panic, Bitcoin dumped 14%. But compare that to XRP. It has quietly shown massive structural resilience, dropping only 10%. XRP is actually showing structural strength compared to the undisputed king of digital assets. By the end of this explainer, you are going to know the exact technical support levels you need to watch, and you'll understand the precise Wall Street supply shock setup that's quietly happening in the background. Before we look at the internal ecosystem, we absolutely have to address the external catalyst dragging Bitcoin down to $67,000 and pulling Ethereum toward $1,800. We're looking at severe geopolitical strife. U.S. military strikes on Iran's Kej Island, alongside attacks targeting Kuwait and Bahrain, have shocked global financial markets. Add to that a regulatory crackdown where the United States officially issued new sanctions against Nobitex, Iran's largest crypto exchange. This is exactly what caused that $1 billion in liquidations. And let me be very clear, for Crypto Global News, I need you to like, share, and subscribe right now. If you are watching this without a subscription, you are missing the alerts. Click subscribe to stay on the timeline. It's completely free for you, but it gives me the motivation to keep making more videos like this. In markets this volatile, timeline-sensitive data is the only thing standing between you and getting liquidated. Now, let's pivot below the surface and analyze what the smart money is actually doing while retail runs for the exits. US-listed spot XRP exchange-traded funds have recorded positive net inflows for 13 consecutive trading sessions. In just the recent streak alone, we've seen $117 million flow in. The total cumulative net inflows for XRP funds now sit at an absolutely massive $1.42 billion. Guys, institutions aren't panic selling. They are aggressively accumulating the dip. They're scooping up the exact same tokens that terrified retail traders are throwing away at a massive discount. That institutional accumulation brings us directly to a fascinating supply dynamic playing out right now. On June 1st, true to its automated schedule, Ripple unlocked 1 billion XRP tokens from its escrow system. On the surface, that sounds like massive overhead supply pressure capping short-term rebounds, right? But while the front door opens, the back door is being completely drained. In recent days, more than 25 million XRP tokens have been pulled off centralized crypto exchanges. This creates a critical supply squeeze. The liquid supply is shrinking right as institutional demand is silently locking up tokens. We track these exact exchange outflows the second they happen, so make sure you join our Telegram group to get that real-time data. All of this accumulation is preempting one specific legislative event, the Digital Asset Market Clarity Act. This is the absolute definition of a game changer. This bill establishes precise jurisdictional boundaries between the SEC and the CFTC and officially classifies assets like XRP as digital commodities. This legislation just advanced past the Senate Banking Committee with a decisive bipartisan 15-9 vote. It's now sitting on the full Senate calendar. This isn't some distant pipe dream. It's happening right now in Washington, D.C., and it is the key to the whole shebang. So, why does this matter? Because the Clarity Act is Wall Street's final hurdle. It provides an ironclad federal legal framework. For years, major Wall Street banks and cross-border payment giants have been held back by regulatory ambiguity. But the proof of what happens when that ambiguity is cleared is already here. Just recently, a massive consortium featuring Mastercard, Ondo Finance, and Kinexys by JP Morgan successfully utilized the XRP Ledger to settle and redeem a tokenized U.S. Treasury fund. Just imagine that scale of interbank integration happening daily once the Clarity Act gives them the green light. The floodgates are preparing to open. And the infrastructure to support that massive volume is already being built. The Kalshi institutional pipeline is definitive proof of this impending volume. Kalshi is a major U.S. prediction and derivatives platform. After successfully launching regulated Bitcoin perps, they've officially filed for regulatory approval to launch XRP perpetual futures. This is absolutely critical. If approved by the CFTC, this gives domestic institutional traders a fully compliant avenue to gain massive price exposure to XRP without actually holding the physical asset. It's the exact necessary plumbing Wall Street needs to enter the ecosystem at scale. But we have to address the immediate, urgent reality of the chart today. While the macro setup is historically bullish, the short-term technicals are flashing red. XRP recently broke below its critical $1.30 support level on heavy, undeniable volume. Right now, as of this recording, it's struggling just to hold the $1.20 to $1.24 range. We're down roughly 8% over the past 7 days, and technical analysts are warning that failure to reclaim that $1.30 zone immediately is gonna trigger further downside. This brings us to the most important question of the day. If the geopolitical sell-off continues to drag the broader market down, where is the ultimate bottom for XRP? Well, before we look at the specific targets, I want you to head over to the YouTube community post right now and drop your exact price predictions for the bottom. Get involved in the conversation and put your analysis on the record. Okay, here are the critical support targets you absolutely must write down. The immediate zone is right here at the $1.20 intraday recovery attempt. If the bulls can't hold this line, the doors open immediately to our secondary defense at $1.10. Now, if the geopolitical crisis escalates further and forces even more liquidations, we're looking at deep capitulation down to the $1 major psychological level. That $1 mark is the ultimate line in the sand where we would expect massive, aggressive institutional buying to step right in. But listen, these technical levels don't exist in a vacuum. The macroeconomic picture isn't complete with understanding the upcoming U.S. Federal Reserve policy meetings. The Fed's decision on liquidity will be the ultimate catalyst that decides whether we test that $1 level or violently rebound back above $1.30. If you want to know exactly how the Fed's next move will dictate the timeline of the Clarity Act and impact your portfolio, click the card on the screen right now. I'm pointing right to it. Click that card before you lose your edge, and I will see you in that explainer.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.